Welcome back. Today we're looking at a script detailing quite a dramatic period in India's precious metals market, 2024 to 2025. Record prices, gold financializing, silver going wild industrially and for investment.
Yeah. In the groundwork here, the data points, they're really solid. You can tell there's a strong grasp of the mechanics, WGC figures, RBI's 73 tons, that massive 7669 tons silver import record. Really good stuff.
Absolutely. The factual basis is strong.
But, we're here to talk about maximizing impact, making it land better. And I think the structure, well, it could be working harder for the content.
Okay, structure. That's a good place to start. Let's dive in.
Right. So first, big thought. To really grab the listener, you should probably lead with the most, let's say, explosive consequence of everything described. That physical silver shortage in October 2025.
Ah, interesting. So flip the timeline? Because right now it builds, chronologically. Gold in 24, silver building up, then the crisis. It feels logical, maybe?
It is logical, but it's not necessarily the most engaging way in. The weakness, as I see it, is that you're holding back the real shocker. I mean, the fact that major silver ETFs actually had to stop issuing new units because they couldn't source the physical metal, that's the headline.
Right. That is the core drama.
And currently it feels a bit buried. It's the payoff, and you make the listener wait too long for it.
Okay, I see the point about bearing the lead. But playing devil's advocate for a second, if we start with the chaos of October 25, do we risk confusing people without the setup from 24, like the context?
Not necessarily. I think you can use the crisis as the hook. So the suggestion is resequence it. Open with the tension of that shortage. Immediately hit them with that core question. How on earth was India paying a, 10% premium on physical silver when there's a global market?
Right, pose the puzzle first.
Exactly. Make them ask why. Then, the historical data you lay out, the gold financialization, the twin drivers for silver, it becomes the answer to the mystery you've just presented.
Okay, that reframes it completely. The crisis isn't the end of the story, it's the premise.
Precisely. So, concrete examples? You could start with, say, painting a picture of that October market. The frantic search for physical bars, that huge premium jumping out, the ETF halt. Describe the symptom vividly.
The fever pitch.
Yes. Then you can smoothly transition back. So how do we get here? And that's where you bring in the gold story, the industrial demand for silver. Piece by piece, it turns a report into, more of a thriller, almost.
I like that. A compelling mystery. Okay, let's shift gears slightly, moving into the analysis itself. The script does a great job distinguishing the drivers for gold versus silver. But the conclusion, the bit about the new normal, it feels maybe a touch general?
Agreed. It's accurate, sure. It correctly points out gold shifting towards, financial instruments, ETFs, futures, that sort of thing. Less jewelry, more paper.
Right, the financialization.
And it nails silver's drivers too, the industrial pull from green tech, solar, 5G, plus the investment angle. But the weakness, I think, is summarizing it all as just a structural shift. It's true, but it lacks sharpness.
It doesn't quite capture the implications, maybe, especially around modernization.
Exactly. It misses a chance to really contrast them. So the suggestion, sharpen that synthesis, explicitly frame gold's new reality as primarily a wealth hedge, increasingly disconnected from cultural use, against silver's transformation into a strategic, consumed industrial commodity. Think of it as vital for India's growth plans.
Ah, so it's not just different drivers, it's fundamentally different roles now.
Fundamentally different roles and diverging paths. Silver isn't just poor man's gold anymore. It's become, almost infrastructural. It's on the nation's balance sheet in a way it wasn't before.
Okay, so build a comparative framework there.
Definitely. And use the numbers you have to make it concrete. That record 7,669 tons of silver imports, frame that as India literally eating silver to build its future. Solar panels, electronics, it's being consumed.
And contrast that directly with gold's situation.
Yes. Hammer home how those crazy prices hitting what, 114,000 rupees per 10 grams, led directly to that 31% crash in Q3 jewelry demand. The point isn't just price went up. The point is the price forced gold out of its traditional cultural space.
Pushed it into the purely financial realm.
Right. It became inaccessible for weddings, for festivals, for many traditional buyers. So it shifted hard into investment portfolios, ETFs. One metal being consumed for growth, the other being hoarded purely as wealth. That contrast gives the new normal real teeth.
That's a much stronger, more specific takeaway. Okay, final point. It connects to the price, actually. The script mentions the huge price moves, but maybe we can make the link between specific prices and the resulting behavior even more explicit.
Yes, exactly. This is about cause and effect. The topic sentence here is make it crystal clear how hitting certain critical price thresholds directly cause the behavioral shifts you document.
Because right now it feels a bit like price hit 100,000 rupees, and then jewelry demand fell, like two separate facts.
Correct. The weakness is that it presents them sequentially, not causally. That 100,000 rupee mark for gold wasn't just another number. It was a massive psychological barrier, a line in the sand for the average Indian buyer, you know?
A tipping point.
A huge tipping point. Crossing it wasn't gradual, it was almost instantaneous in its effect. So, the suggestion is simple. Dedicate a moment, maybe just a short paragraph, to analyzing that specific barrier. Frame the 100,000 rupee level as the point where gold effectively split into two different assets in the public mind.
Okay, emphasize the threshold itself as the mechanism of change.
Absolutely. Make the price the active agent. Use that 100K to 114K climb to explain precisely why jewelry demand cratered to that 5-year low projection, the 600-700 tons. It wasn't just expensive, it was prohibitively expensive for its traditional use case.
And that directly fueled the financial side.
Exactly. That's the linchpin. That price threshold is why you saw traditional buyers either drop out completely or, crucially, pivot to becoming financial investors. Hence that massive 165% jump in ETFs' assets under management. The price didn't just reflect the market, it remade the market.
Got it. So the price hike becomes the direct, stated cause for the capital flowing out of necklaces and bangles into financial products.
You show the price hitting the mark, and then you show the immediate domino effect. That makes the analysis much more dynamic and impactful.
Excellent. This is great. Really focused on narrative power and sharpening the core arguments. Okay, let's quickly recap the key action points for the listener.
Right. First, structurally, strongly consider starting with the climax. Lead with the October 2025 silver shortage, the 10% premium, the ETF halt. Hook the listener with the crisis, then explain how we got there.
Second, analytically, sharpen the new normal synthesis. Don't just say structural shift. Explicitly contrast gold's financialization and its move away from cultural roots with silver's new role as a consumed strategic industrial metal essential for India's modernization.
And third, causally. Make those price thresholds active agents. Specifically, frame that 100,000 rupee gold price not just as a record, but as the direct cause that fractured the market, driving down physical demand and simultaneously boosting financial investment like ETFs. Show the trigger, then the reaction.
Fantastic. Implementing these changes should take this already strong piece and really elevate its narrative drive and analytical clarity. We definitely encourage you to work these suggestions in, and please, send the revised script back our way. We'd be keen to see the next version.